Title of this is Invest the Rest. Why term is better than whole life. So I'm going to try to make this really to the point. I don't want to confuse people with a whole bunch of jargon and terms that you may or may not understand. I just want to keep it really, really simple. So I'll try to do this in 20 minutes or less. So let's see. Make sure you like and subscribe to my channel, Free Game. Make sure you like and subscribe. So let's get into this. All right. So real quick, I'm just gonna explain the differences. And I wish I had like a whiteboard. Dang, I don't. Okay. The differences in term life and whole life is this. Term life policy means that you're covered for a certain term, a certain period of time. Okay? Just a certain period of time. It could be 10 years. It could be, here we go. More like, it could be 10 years. It could be 20 years. It could be 30 years. It could be 40. It could be something as long as a term 80, which covers you until you're 80 years old. Not 80 years, but until you're 80 years old. What else? There is term policies that's just like the ones that you'll get from like Globe Life. That's where, you know, let's say you're later already in your later years and you just need some coverage for that last like 10 years. You can get that. There is something similar to term life, which is the insurance that only covers for you to be buried. Okay, and that's like just your burial insurance. But again, that's still just for a piece of something. Now you can get a term policy for however many dollars you want to get it for, depending on the company. You can get a term policy for 10,000, 20,000, 100,000, half a million, a million. Just depends on how much you are able to pay at that time. It's normally cheaper than this other option, which is whole life. Then there's also indexed universal life, which is very similar to a whole life policy. Whole life is where you're paying a higher amount of money, of course, for it to be coverage for your whole life. So if you were to live to be 95, 100, or whatever, this is your whole entire life is what you're paying for. And every single month, every single year, you will continue to pay this particular amount. Index universal life policy, again, is more expensive. And with index universal life, normally you're paying for a short period of time. Like let's say you're paying for 20 years, 25 years, something like that. And then you stop and that keeps rolling for you. Okay. But again, whole life and the index universal life, the IUL, are much more expensive. Let's just say for a $500,000 policy for a term life person, you might only be paying, let's say, if you're not a smoker, let's say, you might only be paying about $40 a month for that with most companies, which is like peanuts. $500,000, $40, cool. If you are a smoker, you're probably gonna pay, let's say, 100 and something, maybe 130, 120, something like that, depending on the company. That's gonna be about your going rate. Okay. If you get a whole life policy though, and you want to get coverage for $500,000, if you're not a smoker, it's going to be several hundred. Let's say, you know, at least 200-300 a month for a whole life policy of that amount, of that size. We're not trying to leave our loved ones with no $20. We're not trying to leave our loved ones with just enough to bury our motherfucking ass. Make it make sense, okay? This shit right here is how rich people that we know today as the 1%, how a lot of them got rich, how a lot of them kept money flowing throughout their family, was when a big breadwinner left or departed this earth, there would be a life insurance policy or inheritance. Okay, if they couldn't inherit the business, if they couldn't keep operating the business, there was still a life insurance policy. These policies might have been, $500,000, $1 million, a couple million, 5 million, whatever, and once that was paid out to the beneficiaries, then the sons and daughters and whomever, the other spouse or whatever, could go on and continue the business or open their own business or get into real estate, whatever it is that they want to do with that money to sustain them for a long period of time. They could do that. If they didn't want to go back to work right away, they didn't have to, because I just got $1 million or I just got $500,000. You know what I'm saying? So we ain't trying to have these little peanuts amounts. All right. When I'm talking about amounts, I'm going to be speaking up upon things that are upwards of $250,000, $500,000. Okay. So let's say you want to get that type of policy in this whole life. Again, if you're a non-smoker, it's still going to be hundreds of dollars. Okay. If you are a smoker, it could be 7, 8. I've heard as much as 900 a month. Back. Okay. So it could be like almost $1,000 basically a month, or close to it, or 700, something like that a month, for you to have this policy. And of course, yeah, whole life it goes through, you could be 100, but how many people are living past 80, 85? Not that many. And usually by the time gotten to that point of life, you should have been amassing some coin within there. Okay. So to have a whole life policy, you're paying all this money for it every month. Let's just say you paying $500 a month for it. Okay. People say, oh, well, it builds cash value. Well, it takes time. It takes years for you to build that cash value. Also, your cash value is never going to be $1 million, $2 million. It's never going to get past the hundreds of thousands. 9 times out of 10. Most of the time, it doesn't. And even if it does reach that or beyond that, how many years do it take for it to even get to that? Okay. And still, you have to put that money back there. You're borrowing from yourself. You're not getting the cash value, building it up, and I could just go get it and my death benefit stay the same. Not quite. That's not quite how it works. Okay. Your death benefit and your cash value is together. Okay. So if my death benefit was $500,000, okay, and I wait them few years or so, 10 years, and let my cash value build up, and now I want to open this business, or now I want to buy this house, I want to do whatever, and borrowing against that policy, and let's say I pull out 100,000. Well, now my death benefit, instead of it being 500,000, is 400,000 now. And if I don't put that 100,000 back into that policy, guess what happens? I lose that. So if something happened, death benefit is decreased. Okay. So if it was, 250,000 death benefit, and you took 100,000 out, now it's only 150 there. Okay. So you see the deduction there. But again, remember, that shit don't happen for some years. You can't even look at that. You can't even think about taking it out. And also, it's not quick. It's not, oh, I got cash value, I can make a call, and in 24 hours, the money in my bank. It's not like getting a personal loan. It's not like getting a hard lender. It's not like getting a personal line of credit. It's not what people think it is. And I want to make sure people understand that life insurance and finance are two different fields. You can use life insurance policies or life insurance products to help you in your financial journey, but they're not the same thing. So if somebody's selling life insurance, if they're not a financial advisor, if they don't have their securities license in some kind of way, they really can't advise you on where you should put your money, and, oh, you need a whole life policy because if you get the cash value and you can invest in such and such. They already using the wrong terminology that they're not supposed to legally be able to use, and that's any state. Okay, so just want to make sure people understand the difference. Term is cheaper for however much you want, and you could get a long-term policy. Okay, term really is for people to be able to pay off their house, to pay off those big things if the breadwinner dies. If I have a spouse and my spouse make $75,000 a year, whatever they make a year. We got this house. House prices are crazy now. But let's say we paid 200,000 for our house, or 250,000, and we have a term policy for 30 years, same amount of time as our mortgage on this house. If we get to whatever end of the year, if we just bought the house and we in year 5, okay, and not that much has been paid, and some freak accident happened, or a health issue happened, or whatever, and my spouse is now gone, and I don't have the coins to be able to pay for that house, guess what happens? You lose the house. The house gets foreclosed. If you don't, especially if you a stay at home mom, what is it? You don't have any of your own like income coming in. There wasn't any, passive income, whatever coming in. Then now y'all could lose your house. You could lose everything. But if you had a policy for 250,000 or 300,000 or 500,000, you could pay the house off, or you have something for the payments for the house and the taxes to come out of, and then you also have your other money over here, so that you can be able to still live and still have the things that you need and want, and be able to take care of your household while you grieving, before you got to hurry up and go back to work. Okay. If you a parent and your child passed away or whatever, you gonna be grieving. It's inevitable that you're going to need some time. That money buys you that time. If you don't have that, where your cushion? It don't cost that much what people think it costs to bury somebody. If you're doing a cremation, you might could do a whole funeral for under 5K. Probably less than 3, depending on what kind of situation you got going on and what their wishes were or whatever. But again, that's term life. All right. You are only paying, let's say, $100 right now. For example, I currently have a term 80 policy with a particular company. I won't name it on here, but I have a term 80 policy. It's for $500,000. Anything happened to me, both of my children are going to get $250,000 a piece. Okay. Of course, they're going to use whatever that they can, their funds, to bury me, cremate, whatever, whatever that my wishes are that I outline in my will. And they get to have the rest of that. If they don't want to go right back to work, I'm pretty sure $250,000 will help them be all right for a little while. Okay. I'm pretty sure, a couple $100,000 will help them be all right for a little while. Okay. In the meantime, instead of me having spent 3, 4, 5, 6, however many hundreds of dollars on a whole life policy, I only spent $100, okay, for a term 80. In the meantime, while I'm still alive, that money that I'm saving, I can invest that into something else. I can invest the money that I'm saving into, for example, you can invest it into an IRA, individual retirement account, or you could put more towards your 401k if you want to roll that into where you're paying with your job, or you can have something separate from your 401k with your job. And because if you had the money to put it into a whole life policy, why not put it into something that's going to accrue more over time, that has the ability to grow at a higher rate over time? And remember, you could put money into an IRA. I've said this on a previous video. You can put money into an IRA for 20 years and stop, and then it'll keep rolling. It'll keep compounding. Okay, your cash value not building quite the same way. So make sure, if you are talking to someone that's selling you insurance, that's telling you about insurance, that's offering you certain insurance products, make sure that they break that down to you so that you fully understand what you're getting into. Okay. But again, it's better to put that money towards something better, something bigger, invest the rest. It's better to get you a term policy and invest the rest. Don't think, oh, well, I got some money saved. I got this over here. I got this business over here. I got this savings account over here. I have, my a Chase account. I have a Navy Federal account. I have, let's say you have 10 bank accounts somewhere. Each of these bank accounts all got $10,000 a piece in it. Wonderful. There's $100,000. Okay, let's just say. Let's just say you have that. Most people don't, but let's just say you have that. All right. And you feel like that's security for your family and your loved ones. All right. If you did not set those loved ones, hello, how you doing? If you did not set those particular loved ones as the people that have the ability to get into your account, it's like I forgot what the name of it is. Basically, you can set someone to have access to your account, kind of like in the event of your death. So they don't have to be an authorized user while you're alive or anything, but in the event of your death, this is a person that can come retrieve the funds out of there. If you don't have that, if you don't have it outlined in a will in a trust somewhere, who's supposed to do what? Okay, you good. If you don't have that outline as far as who's supposed to do what, that is what ends up in what's called probate. That's what ends up in your family going to court and trying to figure it out with the state, what the state is going to try to take, because that's what they're going to try to do. Okay, because if nobody comes to claim anything, what the state going to do? Oh, eat your money right on up and put it right back into the state, just like how they eat up our taxes. Same thing. Okay, the wonderful thing about life insurance is that is the thing that can't get put in probate, because when you set up a life insurance policy, you automatically setting up a beneficiary. So if you want your kids to get however much money and you want to make sure that they get in this, life insurance is going to definitely ensure that. Okay, so you still need to have something, whether you choose term, whole, whatever, don't matter. I personally prefer term. I offer term. I'm with Primerica, so of course, that's what we do at Primerica. We offer term and help you to figure out how to invest the rest. I am not a securities licensed professional yet. I'm definitely moving toward that, but I'm learning about it. I know a lot about it. If you were to sign up a policy with me, for example, and you wanted to do that portion of it, I want to, start an IRA or something, I could definitely get you to, the right person to help you be able to do that. But so just a disclaimer, this is not giving you direct financial advice, because I can't give you that. I'm not a financial advisor, but I can definitely advise you on which type of policy makes sense for most people. And for most people, you're going to want to get term. Whole life is something that banks do. Okay. Whole life is something that people that are already rich do. Whole life is something that if you already have money in the bank, you already got a business, you already got your house, you already got houses, you already got, whatever assets that you want to acquire, and you got so much money left over, you got a surplus of, however many $1,000 left over, and you can't give any more because there is a cap. There's a cap on how much you can put into an IRA. Right now, the cap, I believe, is $6,500. Okay, so $6,500. It used to be $5,000, and it was $5,500. Now it's like $6,500. So let's say you've given that maximum to an individual retirement account, and whatever other accounts, maybe you got a 401k with your job, or a 403b or something if you're in education, whatever that you have. Okay, let's say you've already maximized that out. You already have invested in your business and whatever, but you still have, an additional however many thousands of dollars a month that you're making off of whatever you're doing, your product, your service, your business, the employer that you have. Let's say you're a doctor or something, whatever it is. Okay, you already got your coins set up somewhere else. Cool. Now you can go get your whole life. You don't know what else to do with your money. You don't want to just sit in the bank. Okay, cool. Go on and instead of just saving that couple thousand, go on and take 500 of that, put it in the whole life, and let it accrue that cash value. If you want another thing to put your money in and to make sure that you're good for the whole life, sure, fine, do that. Okay, but again, if you are a regular person, like most people, if you are a regular person that is middle class or whatever, especially if you're not even middle class, you definitely need life insurance. Don't nobody want to buy them chicken dinners that people be having to sell in order to bury their loved ones. Somebody want to do that, and your loved one will hate for you to have to do that. You don't. For the same amount as a person is paying for a pair of Jordans every month, I'm paying less than that to have a $500,000 policy. And the only reason why I'm paying that is because I was a smoker. Okay? If I wasn't, if I wouldn't have ever been, it would be like $40. Okay? Which is a fraction of what people paying for a pair of shoes, an outfit. Those lavish dinners and lavish lunches and all these brunches and stuff that people go on. Baby, just a fraction of that would make sure that people are covered in the event of their death, and that they have something to pass on to their kids, their loved ones, whatever, whoever they want to pass it on to, without having to worry at all about the shit being caught up in probate, or not having to worry at all about their family members not receiving something when they pass, or having to wait to go to court and go through all of this different bullshit in order for them to have something when they pass. Okay? So, again, term is for a certain period of time, 10 year, 20 year, 30 year, 80 year. You can get, term 80 up to when you're age 80. You can get a term policy, okay, to cover you, to make sure that your home and those large expenses are taken care of in the event of your death, especially if you are the breadwinner. All right, or if you're part of the breadwinning in your family. And your whole life, that covers you for your entire life. If you live past those years, if you live past a certain time, and it's a lot more expensive. Term life can be renewed. Okay, so if you had a term life policy and it was a 10-year policy or a 20-year policy, let's say you started it when you were 25, you got a 20-year policy. When it's about time for that 20-year policy to expire, your insurance company should be sending you emails, sending you something in the mail, and you know, hey, your policy's about to expire, because they want you to renew it. Okay, you can renew it if your health is still good. If you're in the same position in life or whatever, it's gonna be easy to go ahead and renew it. Okay, that's the caveat. That's why a lot of people prefer to get a longer term, okay, or prefer to get whole life. If you can get whole life for a low rate, awesome. If you got the money to be able to do it, awesome. But I'm just letting you know, if you don't have the coin to do it, you still need to have something, and that's term. All right? Again, term, cheaper, whole life, a lot more expensive. If you have a term policy, you can make sure that you cover it and invest the rest. I hope that this helps somebody understand it a little bit better. If you don't have any life insurance, please get some. You don't have to go with me. Get it from somewhere, anywhere, anybody. And make sure, if you got it through your job, understand that you can have multiple policies. Understand that you don't have to just have the one. Okay? You can have 10 policies if you want to. Nobody's saying that you can't do that. You absolutely can. You can have as many policies as you want to. All right, as long as they're legal and set up with a company that's real and exists. You can definitely have that, and they all will pay out. Okay, they all will pay out. Some companies move faster than others with getting you your check. You know, some companies will have you your check before the funeral home proceedings is finished. In some places, you might have to wait a few weeks. It just depends on the company and what's going on at that time, the cause of death, different things of that nature. Okay, so keep that in mind. But have something. Have something. Doing GoFundMe's, the chicken dinners, the having to get your family together to get those funds together is like another nightmare in itself, especially if you burying somebody that was really young, or if you burying somebody that was older. Still, if it's your me, ma, grandma, or whoever, y'all already mourning. Why do we need to be mourning and also trying to figure out, putting more stress, putting more, fuel on the fire of our stress, basically, because of what we didn't have, because of what we didn't set up. So make sure you get some. If you don't have any, it is very important. Very, very important. So I just wanted to make that real clear. If you have any questions about it, if you would like a consultation, if you want to know like what you know, if you be qualified to get any, you can definitely text life to 815-540-3288. That's life to 815-540-3288. You can text me that, and we can get in tune. There's also a Calendly link, I believe, in my About Me. If it's not there, I'm gonna make sure after I do this live to put it there. Could have sworn it's there in my link tree. There's it says life insurance consultation on there. If you click on it when you get to the link tree, but if you and that's only if you want to, you know, schedule another time or something specifically. You can do that there, and you'll, you know, put in not too much information, just your email for me to be able to reconvene, your email and your phone number for me to be able to contact you at the time that you set on there. If you don't have a set time, if you want to talk right now, whatever, again, you can text life. If you forget, life. If you just want some information, you text info, whatever, to 815-540-3288, and I can answer some of your questions and help you get started with a policy for yourself, your family, your kids, your spouse, whomever. Y'all have a wonderful, beautiful, blessed day. This has been Free Game. Toodles.